Morning, it's Friday the 19th of April 2013. Welcome to Gold News Video. You can click up here on Mick to subscribe, and you can follow on Twitter at Gold News Video. Gold is currently back over the $1,400 mark at $1,414.77. Silver is at $23.60. That's a dollar up from its midweek low, which was around $22.40. There's been a massive wave of physical buying occurring around the world at lower prices following a huge decline in gold. The World Gold Council said on Thursday that a massive wave of physical buying is occurring around the world, lower prices following the huge decline in gold at the end of last week and the beginning of this week. The World Gold Council is a market development organisation for the gold industry, and they released a statement from the CEO, Aram Shishamania. It's become increasingly clear over the past week that the fall in gold price was triggered by speculative traders operating in futures market. Their short-term view of generating a trading profit is in stark contrast to the views of long-term investors in gold, as evidenced by the massive wave of physical gold buying that began over the weekend and accelerated through Monday's further declines. The surge in gold purchases is spanning markets from India and China to the US, Japan and Europe. Buyers are viewing this as an opportunity to purchase gold at prices not seen in the last couple of years. The World Gold Council is uniquely positioned in the gold market to get immediate feedback on market patterns. We are already seeing shortages for bars and coins in Dubai, while premiums in Mumbai are at $26 an ounce and $6 an ounce in Shanghai, indicating that buyers are willing to pay more than the current spot prices for the metal. Clearly, the desire to own gold as an investment and for adornment has made itself felt in the physical market. Gold operates on the basic economic fundamentals of demand and supply. Our view is that demand is strong while supply remains constrained, and this is a dynamic, and this dynamic ultimately drives the long-term price of the metal. The Telegraph in the UK have said that they think that the Fed and the Bank of Japan caused the gold crash. They're saying that the US Federal Reserve and the Bank of Japan caused the gold crash. The rest is noise. The Fed assault began in February when it published a paper to warn that the longer quantitative easing continues, the harder it will be for the bank to extricate itself. The report was co-written by former Fed Governor Frederick Mishkin, often deemed Ben Bernanke's alter ego, and said that the Fed's capital base could be wiped out several times once borrowing costs climb. The window will start shutting in 2014, with trouble then compounding at a dramatic pace. This was a shock, as it suggested that the Fed had lost its nerve and will think long and hard before launching a fresh blitz of money if growth falters. Gold bounces on Chinese buying. This is a Kitco report. Gold recovered from overnight lows as Chinese participants bought and traded. Gold recovered from overnight lows as Chinese participants bought and traders who had shorted sold, or the market bought or offset positions and booked profits, said TD Securities. Spot gold initially fell to a low listed by one vendor as $1,336.60 an ounce. TDS cites further long liquidation. However, gold and silver both held above the long-term lows set earlier in the week. After the sell-off, the Chinese emerged as strong buyers and shorts started to take profit. Yesterday, June gold was up $9.80 or 0.7%. June gold closed yesterday at $1,392.50. Deutsche Bank is saying that gold is heading for its first year of losses since 2000. And in other slightly related news, steel's fallen 31% this year. Brent crude is off 17% since February, copper by 15%. And German car sales fell 17% in March. That's it for today. Have a great weekend. More news on Monday next week. Bye.